As a home buyer in 2025, you're better off paying $400,000 than you are paying $390,000 for your home. Trust me, in this video, I'm going to explain the math behind it. Most people don't understand this part, but it's very important. In an age of affordability, where that's something that's very important to buyers, paying 400 grand is going to look much nicer than paying 390 grand. Before I get started, shout out to my buddy Ernesto in Texas. He reminded me, we got to get back to the whiteboard, Matt. That's where I learned the most from you in the channel. So here we are back at the whiteboard. I'm seeing this a lot in my daily conversations with buyers, with the real estate agents they're working with. So I want to bring it to you, hopefully to help you in your home buying journey. At least think about the options that you have as a home buyer. So let's jump right into it. I'm gonna give you the math. You're out there looking for a house and the house has been on the market for 27 days. It's listed at 400 grand. You tell your agent, let's go see if we can offer 390 and get our offer accepted. It's the neighborhood I like. Works for me and my family. Let's go get ourselves a great deal, 390 grand. And I'm going to show you 3.5% down FHA, principal, interest, taxes, insurance, mortgage insurance, all in, the whole kit and caboodle. You're getting yourself a great deal. You're only paying 390 and your all-in payment is 3166. The conversation should not stop there, right? You should, if you've got a great realtor and a great lender partner, say, what are my options? If the realtors talk to the agent and 390 is going to do the trick, the seller is happy with 390, why don't we offer them 400,000 with a $10,000 credit? Why, you ask? I'll show you the math behind why. Because at first glance, if you didn't know any better, you would just equate this to a $3,244 payment. You know, it's $78 more than this payment. And you know, we're just using, this is not an offer to lend, this isn't a quote, but we're using FHA, 3.5% down, 6.75% interest rate to get to these numbers for all-in monthly payment. Principal, interest, taxes, mortgage insurance, homeowners insurance, all of it. And I can even break that down for you. For some people, that might be helpful, right? To understand exactly what they're working with. If you worked with me, you've seen one of these Excel spreadsheets, but I think that it's worthwhile to show somebody. Principal and interest is $25.47 a month. Then you've got mortgage insurance, that is $180 a month. You've got property taxes. Again, this will vary by state. $417 is going to be the guesstimate for us at 400 grand. In California, about 1.25%. Then homeowners insurance, which again varies by state, probably $100 a month if you're not in a rural area and you're in California. So all in, excuse me, Mr. Matt Gouget, mortgage, $32.44. All right, hopefully you're following. $32.44, all in monthly mortgage payment. But if you get this $10,000 seller credit, I'll show you what you do with it because I think it's pretty neat. This is based on a 6.75% FHA. So you're putting 3.5% down. This is your interest rate, and that's your payment. You've got $10,000 in credit, though, in your back pocket with the $400,000 loan instead of just getting a $10,000 discount on the price. A 2-1 temporary buy down, if you haven't heard of that, I got plenty of videos. Check out the videos I made on that. Is going to give you a 4.75% interest rate in year one and a 5.75% interest rate in year two. Now, it's essentially a subsidy that takes a few $100s off your payment, but it's a subsidy based on what it would look like with a 5.75% interest rate. So take my word for it, it lowers the principal and interest on this middle one to $22.92. It lowers it in year one to $20.49. And so you add the same numbers, 180, 417, 100 to both of these. Year one, close your loan in February of 2025. First payment due April 1st. So April 1st, you're paying $27.46 a month. That is your payment for 12 full months. April of 2026, your payment goes to $29.89. I should have wrote these more legible and larger. I apologize. But hopefully, you guys can read this chicken scratch. $29.89. That is through March of 27. This payment of $32.44 doesn't kick in until April of 2027. Now, I don't guarantee anything. There's no guarantee that rates will be lower than 6.75. But if you're in a position to refinance, you might not ever get to this. You might be in a position, like some of my clients are, where they're going to be paying this mortgage down. The house might appreciate a little bit. They might be refinancing conventional. Their credit score has gone up. They might be removing mortgage insurance. They might be lowering this interest rate. They might be in a great spot. You know, they might refinance and have a payment of $27.50, which would probably be equivalent to, a 5.5% conventional with no MI. That's just a guesstimate, right? No, none of this is guaranteed. This is all just hypotheticals. But when you look at it this way, what I want people to realize is $10,000 discount in price. We talked about this earlier. $390 price, $3166. This is the question you ask yourself. It's your mortgage, your choice. You get to decide what you want. Do you want 6.75%, 30-year fixed, $390 purchase price, $3166 a month? Set it and forget it. That's what you're in. Starting April 1st, 2025, through whenever you refinance this loan. Or do you want to pay $400, start at $27.46? I realize this isn't easy to read. Let's try this. $27.46. It's been a while since I did the whiteboard, so I should write it bigger. Pay that payment for 12 months. Then go to $29.89 and pay that for 12 months. The truth of the matter is, most loans we're writing today, whether they're 6.75 or 7% or 7.25%, these people aren't staying in these loans for 4 or 5 years, 10 years. Somebody talked to me today about they would pay more over the 30-year loan term. I'm like, you're not staying in this loan for 30 years. Like, not even part of the conversation, right? But this 2-1 buy down, there's variations of it. You can do 1-1, $29.89 year 1, $29.81 year 2, then $32.44 years 3 through 30, and that's a lower cost because you're only buying it down 1% in year 1, 1% in year 2 versus 2% in year 1, 1% in year 2. There's multiple variations of this. You just want to have the conversation. You don't want to just say, let's offer $390, $31.66 a month. I got a lot of clients, it's a lot of money. $31.66 a month is a big portion of their take-home pay. They're only taking home $6,000 a month. Matt, I know I make $8,000 on paper, but once I pay taxes and my medical insurance and all that stuff, I'm only taking home $6,000. $31.66 is going to be a stretch. If I could start at $27.46, I'm getting a 5% pay increase next year. And then I've got that for 12 months. After 12 months, my car is going to be paid off. I'm not going to be worried about $29.89 once my car is paid off. These are the type of things that I know because I have the conversations day in and day out. Monthly payment, above all, is the thing that people care about. Getting a seller credit, applying a seller credit towards a temporary buy down fixes the monthly payment, even if just temporarily. And even if you get to the end, mortgage interest rates have not gone down, you're not in a position you cannot refinance. It's not like you're in some wild mortgage loan that's wildly unaffordable. It's $78 than doing it this way. $78 more, right? You've saved thousands over these first 2 years. And so if you pay $78 more per month for 6 months and you refinance after 30 months, no biggie, right? You've saved 10 grand over the first couple of years, roughly 9 grand. So anyhow, if you have any questions, feel free to reach out. Greatmortgagebroker.com to connect with me and my team. You can go to my website, mtmg.com. You can shoot me an email, matt@mtmg.com. Licensed in 48 states, and we're more than happy to help. If you want to get started on the pre-approval, if you want to see what you qualify for, and then be partnered with a loan officer that can show you different options, connect with your real estate agent, not only help you get offers accepted, but help you structure the offer, the mortgage that makes the most sense for you, just start at greatmortgagebroker.com. Thanks for watching.